Okay, folks, welcome to Thursday Night Stock Charts Live. Sorry I'm late. I had a whole bunch of tabs opened up. I'm getting ready to go live, and I closed them all down. So I had to just open them all up again. All right, so what we're going to talk about tonight are some major concerns that I have. We'll talk a bit about the Fed meeting yesterday. Uh, I watched it on YouTube, and I'm frankly very, very surprised with the market reaction. I thought the initial reaction by gold was the accurate one. It shot up higher along with the miners. Then Fed Chair Powell came out, spoke, and hammered the price of gold down another, what, 25, 27 bucks today? We'll take a look at that in a moment. We have other topics I want to talk about, and I'm only going to say let's call it the sickness. Okay, I have to be very, very careful nowadays on this platform because they're starting to um, take my videos and make them less desirable for advertisers, which I really don't care. I don't really make anything money off this channel, so I really don't care about that. But what it tells me is that their algorithm is scraping my videos and they don't like any type of dissent from the narrative. So one of the other reasons why I was late, I was trying to set up a product that helps me to simulcast to not just this platform, but other platforms as well. I've used it in the past. I haven't used it in a long time, but I'm hoping that they get Rumble on or uh, what's the other one? Odyssey. And those are more free speech platforms. So we'll try to develop an audience on those platforms moving forward, because I don't think our days on this platform are going to be. They're probably not going to be around that long. So that's not going to dissuade us from having a conversation about what's impacting the markets and where we think they're going to go. What's impacting the market, what was impacting the market just prior to the Federal Reserve announcement yesterday. The markets were under a lot of pressure. We expected that. We called that. We shorted Microsoft. We made money on that. We added more to our shorts yesterday on strength. And today the markets were up. Therefore, we were wrong as of yesterday's short. We're looking to see how we close out the week. Do we manage to break out above resistance levels and stay there, close there? Or is this a knee-jerk reaction to the Federal Reserve, and all of a sudden people will wake up tomorrow morning saying, wait a minute, there's something wrong here. We have economic data coming out tomorrow, lots of inflation numbers coming out. So that'll be out early tomorrow morning. And we're going to talk about inflation as well. I want to talk about, hey, Franklin, how you doing, pal? Good to see you. I want to talk about some concerning, distressing issues. We got to take a step back here. A lot's happened in the past year and a half. Uh, I don't know a person out there that thinks that we've gone back to any sense of normalcy whatsoever. The problem is that you take a look at what's going on down in Australia, and you wonder, how did it get this bad? How could it possibly get this bad? And it's not even that bad here. I mean, those are good people, Australians, and they're under a what, day 250, somewhat crazy number of a lockdown. You lock in place. You have to have special permits to leave the house. You know, that's scary stuff. It's dystopian. It's Orwellian. You throw your label on it. It's just not right. It's not freedom. And the problem is that freedom is becoming all the more of a, I don't know, it's fading. And you talk about, let's run through the list. You talk about the elections. People aren't buying the elections. Uh, I don't know. I want to see the audits. I'm not drawing a conclusion one way or the other. Does it smell fishy? Sure, god darn does. Uh, but we want to wait for the audits. Maybe it was a legit election. We don't want to be hyperbolic here. That's not our job. We work with facts. They say to trust the science. Let's trust the science. If only we were able to talk about it. So you take a look at what's leading this country right now, and you have a guy that is just full steam potato. I mean, the guy's as corrupt as they come. More data coming out. They released the emails from Hunter Biden. They validated them. Even the left doesn't disagree with the fact that they're legitimate emails. The big guy gets 10%. So these news stories are just continuing to roll out. So we have clearly a president in office, or if he's not running the show, somebody behind the strings with a very, very leftist ideology, and they're winning. They are winning. We have a feckless Republican Party that will do nothing. Maybe some of them are waking up. You have a couple of people out there, Marjorie Taylor Greene out there. You know, she's a congresswoman, one of many. You know, she's not a senator. Rand Paul doing a good job. Ted Cruz doing a good job. But, I mean, there ain't much more. So, you know, there's no pushback. And even if they did have, even if we had larger numbers of people pushing back on this left-wing agenda, they don't have any power. They have no power. So you have the election, you have COVID, the complete, no matter what happens, they failed at management of COVID. It's done. It's in the books. You know, when you mandate that half your country get a drug that they don't want, you failed. When you demonize half the country because they didn't get a shot because of whatever reason, you failed. And what impact this is going to have on the economy, it's going to be mind-boggling. I can tell you right now, I know a person, management at a hospital, they're about to let go. This is one floor of the hospital, 10% of their staff, 10%. They're already in trouble with terms of staffing. Now they're letting go of 10% of their workforce because they didn't want to get the jab. They're talking about bringing in our New York State governor here. They're talking about bringing in temporary workers with visas from the Philippines. It's all about replacement of U.S. citizens, bringing them over from Philippines, Ireland. So that's going to be their fix-it. So that's in the plans. You know, you add on to the fact that we have a regime here that is totalitarian. You know, I don't think there's any other way you put it. You have a Federal Reserve that works for the 1%, despite the fact that they're charter states. They're supposed to work for the good of the American people. Well, let's face it, they work for the 1%, and that's it. There's no denying that. I mean, you can listen to what they say. That's great. Watch what they do, right? And the reason why we went added to shorts yesterday is that no matter what, they're not raising rates anytime soon. And if they taper, you're going to have a tantrum, and they're going to go right back to buying a lot more than what they were doing before. So we may need to stop out of the position that we put on yesterday, but no matter what, even though I caught a lot of ribbing for being short prior to the past 2 weeks, we were right over these past couple of weeks that the market would buckle. It buckled. So do we break out to new all-time highs? Maybe. Do we put in a lower high? Maybe. Do we break down to lower lows? Maybe. We don't know. We're not that smart. The market is smart. All we're doing is taking the pulse check of the market. Simple as that. I'm not making a big macro call here. The market's going to dictate which way we trade this market. Add to the issues that are confronting this market, you have Taiwan. The Taiwanese are constantly now under pressure from China with warplanes entering their airspace. So at some point in time, somebody's going to get a trigger finger, and things are going to spark. When you have an authoritarian regime over in China that is only emboldened when they see the weakness of the United States, especially after our horrible, horrible withdrawal. And I would argue, and I've been saying this for quite some time now, is that our problems here in the United States, by and large, are self-inflicted. What do I mean? Well, you take a look at our withdrawal from Afghanistan, self-inflicted. You take a look at COVID. I shouldn't have said that, God. You take a look at the virus. and how it's been handled. You have a failure of the media to promote any type of conversation. You have complete ignorance about the reports that are coming out of Israel with regard to people. They're by far the most vaccinated country. They're by far the most vaccinated country with 3 jabs, yet their cases are going through the roof. New cases going through the roof. So something's wrong there, but you're not allowed to have that conversation. I have to worry about this video getting demonetized because I'm speaking my mind. So these are all things that are compounding. You know, it's not just one straw that'll break the camel's back. It's a series of events. So you add to that, the Federal Reserve has been repoing a lot of excess cash from banks. They don't want to hold it. They don't want to send it out. They're giving it back to the Federal Reserve to store it there. So I read into this that this is a signal, not a clear message, but it's a signal that, you know what, there's something wrong, and this has been going on for a while now, this repo facility, and I would argue that this repo facility has a lot to do, reverse repo facility, has a lot to do with China. Now, Evergrande, a lot of people have been downplaying Evergrande, and I kind of find that funny. Why people would do that? Maybe they're just perma bulls and they don't want this to become an issue, and they're going to try to jawbone it down. It's an issue. The fact is that Evergrande is 5 times larger than Lehman. That's a fact. It's also a fact that their bonds are worth virtually zero. And this is what is it, the 22nd? So, you know, unlike a lot of people are holding out hope that Beijing is going to bail out Evergrande. Why would they do that? The only reason why we did it here was so that the politicians can get reelected. They don't have to worry about getting reelected. And take a look at this note off of Zero Hedge. Brilliant. Beijing will pay local bondholders and soft nationalize Evergrande. Here, and this is what I've always warned. And stuffing foreign creditors. They're going to stick all this debt to the foreigners. They're going to take care of their own. God forbid we do that here in the United States. So you already had another bank, a real estate company go down, and you have an insurer over there with exposure that's under pressure. The question is, and this is when it really hits home, who has counterparty risk? Which banks in China? We already know that HSBC, Vanguard, a couple of other European banks have a lot of exposure to Evergrande. And the question that I would have is that which Beijing banks, which Chinese banks could quite possibly fold, and what counterparty risk do our banks have with that bank? That is the series of dominoes that occurs. It's not Evergrande. It's the question of who has counterparty risk. And nobody's playing chess. They're playing checkers. And I find that amazing. I really find it amazing that they're doing that. But we want to be honest, right? We want to be really intellectually honest here and say, okay, so how do we know that besides the reverse repos, how do we know when the bond market is getting really, really scared? You take a look at the bond market. You know, if people are afraid of what's going on over in China, well, they would head into U.S. Treasuries and to the U.S. dollar, which was down dramatically today. And they're not doing that. And in fact, we're going to go over the chart in a while. Bonds are getting hammered. So there's a flight out of bonds and into equities. So the fear is not there yet. There is no fear from the Chinese event. But I would ask you, go back to my commentary back in January, February of 2020. I was interviewed by TrendSpider, Dan Ushman and Jake over there. And the market was rallying. This was, I believe, in February. The market was rallying. And I said, I'm bearish on the market because I'm worried about the supply chain disruption from the disease that hasn't even hit yet here. I don't know how people are ignoring this. But the markets continued up higher until a couple of days later, and they just rolled over. So it reminds me also of a story from Reminiscences of a Stock Operator. It's a great trader's book. If you haven't read it, it's a must. You must read it. Now, I've read mine a dozen times. I have it on my phone. I listen to it when I'm on the treadmill or whatever. And there was the great earthquake over in San Francisco, wiped out San Francisco. And the Larry Livingston's take was, hey, listen, I'm going to short the market. The markets are still rallying. They'd ignored it. And he said, this is going to cause a recession. He started shorting the market. He was wrong. He kept leaning into it, very heavy short, and he became a multimillionaire on that short, which is probably $1 billion today. So, you know, sometimes it just takes a while for this to work out. We are going into a weekend. A lot of times it's Sunday nights that we get the bad news. That's why I want to stick this out, the short side, as long as possible. And if we go into Monday with no news, then we're going to have to lighten up on the short side and look to get long the market, because there's some good sectors out there that if they close where they're at or better right now, I want a piece of it. So we're not stuck in our mentality of wanting to short the market. If it doesn't want to go down, it doesn't want to go down. Fed's balance sheet. Well, the Federal Reserve was busy yet again this past week. New all-time highs. The 1% are doing very, very well. Very, very well. Inflation. You know, we were talking about commodity prices earlier in the year, and all I kept hearing about when lumber was correcting. Oh, look at lumber now. Look at lumber now. It's crashing. It's crashing. And one guy got nasty. He's like, hey, you're so wrong on this. It's just so far down. I said, you gotta take a step back, buddy. You gotta simmer down a little bit. Take a look at your monthly charts and your weekly charts. We're still 40%, despite this sell-off, we're still 40% higher than where we were last year. That's not transitory. And then when you take a look at lumber prices, they're going back up. Here we are, August, well off the August lows, and September, here's about the same time last year. So lumber prices going back up. And, this is another thing I wanted to talk about. What we're doing to the military, this is a self-inflicted wound. They're going to dishonorably discharge 250 Navy SEALs, which account for nearly 25% of the SEAL force. These guys are the elite of the elite of the elite. They're worth $500,000 in training alone, not to mention the unethical treatment of these people, and they're going to let them go. It's the dismantling of the military. So they're going to dishonorably discharge these people court-martials for troops that refuse vaccines, folks. I mean, my God. And here's where the end game is. This is what I've been worrying about more than anything else. U.S. Congress quietly sneaks into crypto bill amendment authorizing central bank digital currency. It's coming. So what does this mean? Well, you already have your vaccine card, right? That's not going to be enough. They're going to want health passports. Health passports. So that way they can track you wherever you're at. So what if you're not being a good citizen? What if you're being an individual thinker and you're not towing the party line? Well, suppose you go to the supermarket. You go to use your digital dollar, but you haven't been a good citizen that month. So your buying power has been reduced by a third. What if the economy is slowing down and the Federal Reserve doesn't want to pump more money into the economy? What if they put an expiration date on your digital dollars? Because there's not going to be any more paper money. This is the end game. Health passports, digital dollar, they got you. Call your senator, call your congressman, call anybody who's going to listen. This cannot pass. This is the end of freedom. And if you question it, just look at what they're doing right now, and we still have paper currency. There's no health passports. Think about what's going to happen when they are able to do that. What if they want your gun? What if they say, you know what, we can mandate guns. I mean, we're going to mandate vaccines. We have nothing in the Constitution that allows us to do that. Well, then why not go for 2A, man? Nobody stopped us. Unintended consequences. You don't stop. You don't hear the Republicans crying about this. Horrible part. Feckless, horrible people. I mean, the Republicans. If they're not going to defend people against the mandate, that's unconstitutional. You don't hear it from the Supreme Court. They're not fast-tracking any cases up to the Supreme Court. So it doesn't seem as if they're all that excited. So what's going to prevent Biden or his successor from coming out and saying, you know what, no more guns. And if you don't turn in your gun, you're going to be fined vis-a-vis the digital dollar. We're going to take that right out of your bank account. $100 a day. Slippery slope, man. And these are the things that hound me about this market and why I can't help but think that at some point in time, there's going to be a flashpoint and the Federal Reserve is going to lose control. And we also have the debt ceiling coming up. I think that they're going to pass it because that's all the Democrats live for is debt and spending. Without that, what are they good for? In their own minds, I don't think they're good for anything. What's the law? The market, it will stay bullish. Maybe we'll see. You're probably right. BLM, 480 shenanigans. Hello. BLM riots over mandate. BLM riots over... Oh, yeah. New York City. Yeah. Wow, I can't believe I'm on the same page with BLM. But they're right. But I don't like the way that girl was treated at Carmine's. I've eaten them many times. That was terrible what those women did. But, yeah, I mean... It's discriminatory. You have history in the United States. You got to be intellectually honest. All right, there have been times in history in this country where they've injected black people with drugs that were not good for the black people. They remember that. And they had a good reason not to trust the government. So I don't blame them. What's the law? They're pushing the vaccine so much that there must be something that we don't know behind the virus. Bang. Look at Israel. Look at Israel. Look at Israel. The number one most jabbed country in the world by far. Their cases through the roof. Through the roof. Well, but you can't talk about that. I guarantee you right now, because of what I've said so far, they're going to demonetize. Guaranteed. Crypto will be a risky. Crypto. I don't know. I don't know how anybody owns crypto right now. I don't understand it. I don't understand it. You're dealing with a government that is going to issue its own crypto. What do you think is going to happen to the competition? It's going to be horrible. How are you going to hide it? You got to pay taxes if you book your profits. How are you going to hide it? I mean, man. Somebody answer that question for me. I would love to know. How do you get around this? I don't know how you do it. I don't think crypto's long for this world. That's my own personal opinion. I could be entirely wrong. I don't know a goddamn thing about crypto. All I know is that they have a massive competitor. That is the United States government, and it's a pretty big competitor. So, you know what? If I had to throw a nickel down, who's going to win? I got to go with the government. Talon. Hey, Talon. /MES. What is MES? Franklin, they've been doing that in the military for decades, using them for testing. Yeah. And you know what the sad part is that, you know, we have an all volunteer military, and we have a government that's gone full steam potato, that they don't give a rat's you know what about the American citizen, much less our military people. How many people are going to want to sign up to go in the military now when they know they're worthless to the federal government? They're worthless. They'll send you to die for no reason whatsoever. They've been doing it for forever now. So these are all things, and this is not meant to get political. Notice I haven't said that Democrats are bad, the Republicans are good, or the Democrats are good, the Republicans are bad. F them all. There are a few people that are trying to do a good job. I will freely admit that. I mentioned Boebert is another one, Congresswoman, a couple of other ones, but that's it. Mitch McConnell, worthless. Kevin McCarthy, worthless. These are not warriors. They don't understand that they're a war. And if they do understand that they're a war, which I can't imagine they don't understand it by now, all they want to be is a part of the 1% once this gets through. I can't wait to take a look at who voted for this, because they're your enemy. They're your enemy. Very sad times. Very, very sad times. All right, I don't want to get into a dark place here. I know it's already there, but let's get to the weekly charts. Okay, economic data that has come out so far this week. Home building index, a little bit better. Building permits rose. That's a forward-looking indicator. That's a good thing. Housing starts rose. Oh, by the way, if you're wondering why this, what is it called? That Chinese real estate firm, Evergrande. If you're wondering why they went belly up, what they did is that they were taking sales. They were taking deposits on upfront sales, marking them as sales. Then all of a sudden the cash flow ran out because it was a hyper growth story, because they were taking in money for properties they didn't even build yet. Think about it. Now all of a sudden they've been paid for all those properties, highly mismanaged. Now they're going to build those properties, except they can't. They can't. That's why they're going to default on their bondholders. Digital dollar is essentially a stable coin. I've heard of that other cryptos trade as an asset, but they're not going to see what you got to think about here. And this is I could be wrong, just for conversation purposes, because I would like to have a forum where you're allowed to have a conversation nowadays. Like at one point in time, we were allowed to in this country. So I'm not knocking you. You could be 1,000% right. I have no goddamn clue, but I highly mistrust the intentions of the government. So if it's control, which it appears to be, look at Australia. I mean, dystopian as heck. New Zealand, dystopian as heck. France, dystopian as heck. Is there any wonder that it's all Western countries that are all using the same playbook? You should go over to the World Economic Forum website, take a look at their mission statement and the stuff that's going on over there. Check it out. They used Orwell's book, 1984, as a handbook for what they're doing right now. So I can't imagine if they want full control. If they want full control, you can't have it if you allow crypto. Can they wipe it out 100%? I can't see why they can't. And if somebody could say why they can't, I would love to hear it. I need a happy moment right now because I don't see a way around it. I would love to hear it. You know, XRP, you can't buy. The SEC got involved with XRP. You can't buy it on Coinbase anymore because I guess now they consider it a financial instrument. Coinbase can't sell it, so I don't know where to go buy it, Robinhood or where else. I'm not sure you buy it. But I think that XRP is one that will survive because the banks like it. So that's one I'm interested in, actually. Because you know where you stand in terms of the federal government. And it really speeds up settlement dates on big amounts of money, the XRP technology. That I do understand a bit. Wednesday, we had the FOMC meeting. Listen, folks, you know, again, I mentioned this earlier. I listened to the statement. All I heard were, yes, statements, this is our intent, but maybe this, maybe that may change. We're not firm on this or that. You know, he was so non-committal, it was ridiculous. Yet the markets took it and ran. I mean, initially, the statement, that the initial headline statement was extremely dovish. And gold ripped, dollar tanked. Then he started talking. Then everything flipped around. So we'll see how the week turns out. Let's give it a little bit of time. Let the markets digest what he said. I didn't hear anything hawkish. I heard nothing hawkish. You're going to tell me what he said, and this is what really got me. So they're going to begin taper in December. That's what we were led to believe, December. Okay. He also said that he wants to end tapering by mid-2022. He didn't say June 2022. He said around mid-May, around mid-year 2022. Around. So he kept them, that's another out. So, okay, so the game plan is that you're going to end taper mid-2022, but you're going to do it slowly. That's not slow. You're going to wind down your purchases within 6 months. I don't think that's going to happen. You're going to see this stock market through the floor if that happens. So I'm not buying it for 1 second. There's no way that they're going to stop tapering. You're going to go from this to nothing, flat. You better, if you believe it, you better overlay a chart of the S&P 500 over this chart, because you're going to see that as goes this chart, so goes the S&P 500. Back to the weekly charts. Gold moved higher because they didn't expect the tapering will be extended into mid next year. I don't know how they could not expect it. I mean, you're going to start tapering. You know, they expected initially November they would start. It's actually supposed to be December now, maybe. And I suspect they'll kick that can down the road. They're going to do it in December because it's a seasonally strong month out of the year. That's why Yellen did it back in 2015. Guess what happened? The next month after, in January of 2016, gold bottomed, went into this current bull run that we're in right now, hitting all-time highs. That's after she raised rates for the first time in roughly 10 years. So I'm predicting that once you get a couple of months of taper under the belt, if they do move forward, then you're going to see a bid on gold because the stock market is going to begin to tremble and the markets are going to take that as, whoa, they're going to have to go up and goose this market even more than what they did the last time just to keep confidence up. Because when you get the market this far extended and you have inflation running rampant, it's going to crush margins. I can't wait to see earnings this quarter. The law of diminishing returns takes hold. Case in point, we've been doing a constant $120 billion per month for what? 18 months, around there, a little less than 18 months. You got to assume that each month that goes by, you get less bang for the buck on that 120 billion. So what if the market begins to roll over after a couple of tapers? Well, they got a lot of they have a lot of ground to make up to get taper to the lack of taper and renewed QE to put a bid under the market. And remember when the markets rolled over back in February, March of last year, the Federal Reserve spoke, but the markets didn't listen. That's why you have so many spending packages getting pushed through Congress. So they better hope that the midterm elections turn out their way, because if you get a conservative majority in Congress and they can't get spending packages through, then what's that going to do to the Federal Reserve and their power? It's going to grossly diminish it. Let's move on. Sir, DRI had a great result today. Okay, I'm not. Oh, is that Darden? At Darden? DRI. What is that? DRI. Yeah, Darden. I'm not losing it. Yeah. All right. Initial jobless claims. The market shrugged this off. Rose big time today. The Marquis PMI, the Purchasing Managers Index, missed. Market doesn't care. Rallied. Yields rallied no less. That's what surprised me. I wasn't surprised that stocks rallied. I was surprised that yields rallied. Leading economic indicators rallied. Did better than expected. And let's do some. Well, tomorrow we have. I think we have some inflation data coming out tomorrow. I don't see it on here, though. I think we have a couple of inflation data points coming out tomorrow morning. Fed Chair Powell gives opening remarks. And what? These guys don't shut up. Okay. Let's go to the weekly charts. Remember that one trading day left to go, right? So a lot can happen here. I'm going to talk about breakouts on a weekly time frame. It doesn't matter where we trade intra-week. What matters is where we close. So keep an open mind. Oftentimes, I say this pretty much every Thursday, is that on Saturday mornings, I'm talking about a chart that looked great on Thursday night, doesn't look so great on Saturday morning after the close of the week. So let's go. Bond yields. Bond yields. Wow. Big breakout this week. So let's take a step back here. Does this look like a bond market that is worried about China? Nope. Nope. So I'm mentioning China and the events unfolding there, we're not factoring that in yet to our strategy because the bond market is saying, don't worry yet. Don't worry. 10-year yields rising, 30-year yields rising. That means that you're not seeing inflows into the bond market. So we have seen a breakout thus far this week. We do have another resistance level above. The question is now, as we hit this resistance level, quite possibly overnight, do we break out or do we fail? That's a question that's got to be asked and answered. I guess I asked the question. It's got to be answered. Daily chart. Daily chart. You know, I've been talking with members about this for a while now. I've been unwilling to really. I've been fence sitting, which I rarely do. Usually, I have a decisive opinion. I've been fence sitting about which way, who's going to win, yields or bonds. It appeared as of yesterday that bonds were going to win because I didn't like these hammer formations and the price of, we'll go to the TLT daily chart to illustrate yesterday's price action. The price of the TLT, 20-year bond ETF, it broke out. But fast forward one day. Man, talk about how one day makes a big difference. Here we are on a weekly time frame. We broke down, not just below yesterday's lows, but we broke down below key support, not one support level, but two. Weekly chart. Wrong chart. Bob, you started the show at 120 over 80. What's your blood pressure now? I don't even want to look. I don't even want to look right now. So on the week, it appears as though we have a problem, Houston. A lot of resistance. We've been stuck in this trading range since July, and thus far on the week, we have a bearish key reversal bar. Volume very heavy. So if we close at these levels or lower, in all probability, we're going lower in the coming week. Westlaw, buy the energy stock with stop lows. Actually, yeah, we're going to talk about that in a moment. I agree with you. It's looking really good. Tips, Treasury inflation protected securities. They made a high only 2 weeks ago, all-time highs. But we've seen some stalling action here. Consolidation at best, correction at worst. Now, if we see a continuation breakout on yields, that's going to put pressure on the tips. No doubt about it. It's going to happen. Now, moving on to the U.S. dollar. You know, for all the reasons why I cited early on in the commentary, why I had concerns about the markets, intermediate term, short term, you don't know what's going to blow up. Every day it's a new thing. So something's going to have to give sooner or later. You have to wonder who has the confidence in our currency. So what the result thus far on the week's events is not good. Bearish key reversal bar. Now think about this. What makes this all the more worse is that the bond market is saying, hey, Powell's for real this time. He's not joking around. He's the real deal. Yeah, he's BS'd us a bunch of times. But this time around, man, nah, he's the real deal. So they sold bonds, rallied yields. There's only one problem. Currency traders, they don't care. Bearish key reversal on the week. Look at the price action after the Fed's announcement yesterday. Look at this bullish key reversal bar. Look at the reversal on the day today. Why didn't the dollar move up higher? What's this all about? So another false breakout on the US dollar, another head fake. Tomorrow's another day. We'll see what it brings, but this is not looking good. The VIX, basket case. Started out the week strong, bearish key reversal bar. One trading day left to go. Stokes still look good here. MACD histogram not so good. RSI back down below 50. One trading day left to go. Daily chart. We closed just off of the 50-day moving average. Not loving these Stokes. I mean, we're at a healthy VIX. It would have gone above 80. Would have stayed there for a while. It wasn't. Couldn't even make it above 80. Very, very weak. So this is bullish for the S&P 500. The Dow Transports, weekly view. We're only down about a quarter percentage points. I mean, technically on the week, we put in a confirmation breakdown on the Dow Transports. What do I mean? Well, we broke down, bottomed out in July, rallied back lower high. What do we do this week? Undercut this prior low. Now, I'm a big believer in closing lows, closing highs, not intra-period lows, not intra-period highs. That I only care where it closes. That's why we put in trades late in the day, not all throughout the day, but late in the day, with rare exception. So we have so far reversed off of the weekly lows, and we are back above that 14,000 mark, but measurably. We're there. Daily chart. An update today, couldn't close above the 200-day moving average. This is not a great chart. One day does not make a trend. You have the 50-period moving average, which is declining. The 20-period moving average is already below that moving averages. That moving average, not averages. Volume was good today. Stokes, possible higher low here. Let's take a look at the, I don't know if they have intraday. What they do. A bit of resistance of 14,300. See how it closed. I pay a lot of attention to the transports because they're like our canary in the coal mine for the stock market. Not a great close, but it held most of the gains. So hats off to the transports. The Dow Jones, bullish reversal bar on the week so far. One trading day left to go. Stokes going in the wrong direction. Volume's going to roll in probably light at average at best. Daily chart. We were stopped at resistance and the declining 20-period moving average in green today. Stokes are looking good. Momentum is building. Volume dropped off today. Think about it. The cyclicals were on fire today. The Dow Jones is made up of mostly cyclicals, yet not a lot of buyers in there today. So we could still be looking at a dead cat bounce off of this oversold condition relative to the third standard deviation Bollinger Band. Again, we want to see how we close out the week and how we open up this coming week. If we don't see a continuation move lower in the next couple of days and we begin to break out and close above support levels, now resistance levels, then you got to rethink your strategy. But right now, not quite there yet, but we're certainly wargaming it. The S&P 500. We broke down below weekly support last week. This week, a bullish key reversal bar. The question is this a retest of the breakdown point? Meaning, are we making an effort to try to recapture prior support, which is now going to act as resistance? Quite possible. Volume light, daily chart. So daily time frame, they spiked it up yet again today, up and into resistance at 44.50. I mean, we closed right there. A slight fade on the day. Volume was okay. It was all right. Denny. Thank you, Denny. I thought I was being, frankly, dark and boring as hell, to be honest with you. Needless to say, I was late today, catching up now. It's great to have you, Denny. Always. Okay, so the daily chart, the volume is far more respectable than what it is on the Dow. So we're firming up here. So let's take our crayon out, because what we want to do is we want to start saying, okay, what if we're right? What if we're right that we have seen a lower high? What if we get that? So what we want to do is make an assumption right now is that today, and we may have to adjust this higher tomorrow, what we want to do is say, okay, what if? What if we break down to new lower lows? What if we close down below 43.05 on the S&P 500? Well, if we do that, that's a continuation breakdown. And this upper band of resistance, while it adds zero value at current, because we don't know whether it's the resistance level that's going to result in a sell-off, a continuation rollover. I may have to manually adjust this higher. But once we break down, if we break down below this support level here, well, then that line here in blue becomes very, very valuable. The reason is this, is because what we want to do is we want to take our crayon out and we want to extrapolate out where we believe our next support level is going to be. So if we fail and we take out this low and we come back down to one of these support levels and then rally back, well, this line continues to decline. And we have historical precedence for this now being our new upper band of resistance in a new downtrend channel. So that's why that upper band is so important at current. And it becomes all the more important moving forward. So just something to watch out for, nothing to trade off at current. Because we don't know whether or not the market's just going to slice right through it like a hot knife through butter tomorrow. It's quite well possible. But if it doesn't, that becomes very, very valuable. Small caps. Good week. Now, here's the problem for the small caps. When yields rise, they rise because there is a perception. And that perception is that the economy is gangbusters. 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 This economy is in free fall. You have 10 million job openings out there, and initial jobless claims rose today above what the expectation. They rose above last week's numbers. So you're still seeing net job losses month over month. Because remember, it's 350,000 jobs per week lost. We're only gaining 250,000 jobs per month when we get non-farm payrolls. That's horrible. That's an economy in free fall. The only reason why GDP is expanding is because all they keep doing is printing money. And the sales, this is the nefarious way that they account for GDP. So you buy something on Amazon. I'm waiting for right now. It's supposed to be here. I got to check my front step. A seat cushion for my chair. Did they make that seat cushion here? Did an employee, did a U.S. citizen paying taxes, working at a U.S. factory, make that product? No. They're getting it from China or India or the Philippines, Malaysia, Vietnam. The last place they're getting it from is here. So if the credit for that GDP, for that sale, if you're a salesman, you want the credit. So if I make that sale gets chalked up to the GDP of not the United States, but to China or the company or the country that employed that worker, that factory that produced that product. All we know how to do here is consume. Issue debt because the rest of the world is stupid enough to take it. Issue debt and consume. That's all we do now. That's what makes us so vulnerable. And nobody in our government wants to talk about it. Nobody. It's scary. And no, I do not have a degree in economics. I don't think you need a degree in economics to figure this one out. It's crazy. You're right, Westerlaw. You can't fight the Fed. Well, you're right to a point. Let me bring up one. I brought it up earlier. I'm going to repeat it again, though. Okay, for those just joining in, you're right. You can't fight the Fed as long as you have a Congress that is willing and a president willing to pass spending bills that keep the game going. Because remember, it was not the Federal Reserve that bailed us out of the CCP sell-off back in March of 20. That was Congress. Sure, the Federal Reserve helped. They tried, but they failed multiple times. It was Congress passing those spending bills, sending out stimmy checks. That's what bailed out the economy, not the Federal Reserve. Just think about that. It's important not to forget that. I agree with you. In a time where we don't have a lot of dramatic turmoil, which could change on a dime, yeah, they're in charge. They're in charge. And you can't fight them. I agree with you. Chip Tues. Weekly chart. We continue to trade down below. Excuse me, my throat's going here. Weekly chart. We've broken the lower band of support. This week, we're making an effort to try to recapture it. This week, do we do it? I doubt it. And the reason why I doubt it, I'm probably more bearish on this chart, and we're short of the Qs. The reason why I doubt it is because yields are going up, baby. And that's not good for the Qs. It's good for cyclicals. It's good for great for the banks. Great for energy stocks. Bad for the Qs. Daily chart. Oh, by the way, unlike the other averages, Qs with only 4 trading days in the week already in the books, 1 trading day left to go, we have a second consecutive week of institutional distribution. Can't be ignored. We shorted Microsoft. We made a nice profit on that. We booked that profit in advance of the FOMC announcement because I was worried that they'd pull some sort of shenanigans, which they did. What I find amazing is how gullible the street can actually be. All right, so just as we did with the S&P 500, we need to do the same with the Qs. So here is our breakdown earlier in the week. We're rallying back. Are we filling the gap? Are we going to retest this upper band of resistance? Those are the questions that need to be answered. If we break out and close above these resistance levels, hey folks, it's probably game back onto the long side. Right now, it's a little bit too early to make that call. Volume, pretty good today. Yesterday as well. But net on the week, the Bears are in control of the weekly chart. The banks, I mean, wow. The banks look really good here. Bullish key reversal bar on the week. Rising yields. Banks love that. Net interest margins. Their net interest margins expand in a rising interest rate economy. Hey, Tommy. So, bullish key reversal bar. Good stuff for the banks. We're definitely going to be looking at the banks as a long. Daily chart. We got hammered on the 20th. We've rebounded. Volume, very, very good. XLK, technology. Bullish key reversal bar on the week after we broke down below support last week. Daily chart. We recaptured, very impressive. We recaptured support today. So what we want to do is get our milestones out there. Volume is good. So we have resistance immediately above on XLK. Again, folks, we're not making a call one way or the other, but we can't ignore the fact that we did see a breakdown on the weekly charts of the Qs of the S&P 500. We can't just make that go away until such time as we break out and recapture support levels, and then we begin to put in new higher highs. The semis, weekly chart. Larry, I see you want Annalie and Franklin, DSX. Okay. Semi's looking really good here. I mean, probably my second favorite chart, the first being the banks, because yields are going up higher. I know how the banks trade in a rising interest rate environment. That's the reason why I like the banks better than the semis. We have a semis shortage, so that matters. The rising yields are not going to help the semi sector, but the offset could be the lack of semiconductors out there. Volume on the week is very, very light. Warning flag on the track with that. That's very, very light volume. Daily chart. Oh, a massive rebound here. Amazing. Amazing rebound. I think they're going to have to pull it back and retest this breakout point. And technically, it never really, we did have a breakout point failure, meaning that we had broken out, consolidated, failed to hold, but we never closed down below this lower band of support, allowing for a rally back. Volume, though, very, very light. Just as in the weekly chart, the daily chart is validating it. And the down volume bars were no joke. I mean, these are serious sellers out here selling the semis. So keep that in mind. Biotechs. I like the biotechs. They're down on the week, but all down weeks are not made alike. We are well off the lows of the week. We could quite possibly go positive. Volume below average, but it's probably going to come in at or around average. Daily chart. Nice chart. Horrible volume. Great chart. Higher lows. Biotechnology is looking good. I'd like to see it close positive on the week. Energy. Somebody mentioned energy earlier. Westerlaw. Yeah, energy is looking wild. Uh, major bullish key reversal off of support. Volume's going to roll in about average, if not higher. Stokes hooking up, RSI hooking up. Daily chart looking pretty goddamn good. But we're at resistance. Volume below average today. We'd like to see better volume. I mean, you know, we're up 3.5% today. I mean, that's a huge move. Yet there was very light volume. Natural gas. Well off the lows of the week thus far. Let's see how we close it out. Did they turn it positive? So you're beginning to see the commodity trade come back to life a bit. You're seeing it with lumber, palladium. Palladium was up in the pre-market. Or was it platinum? Could have been both. When I wake up in the morning, I have LASIK, so it takes my eyes a while to adjust. And I turn on my iPhone. I put on my CNBC app, and I saw the commodities up this morning. I can't even spell palladium. Anyway, it was up earlier. I can spell platinum. Yeah, look at this rally on platinum. Nice move higher this week. Goddamn gold. Pissed me off. All right, oil. Oil's getting ready to burst. Up 2% on the week. Horrible volume. Daily chart. Closed at the highs of the week. Indicators are just what you want to see. Looking really good. Volume light though. So oil looking good. Emerging markets. They broke down this week. They're attempting to recapture support. One trading day left to go. It's going to be interesting to see how emerging markets close out the week. Very light volume. Daily chart. Good Thursday and Friday. Let's go to gold. It's updated. Yeah. All right, gold at current. I heard that announcement yesterday. I was like, gold's got to be rallying. Sure enough, it was ripping through the ceiling until Powell spoke and pissed all over it. So we broke down last week. This week we do have a new weekly low, although we're off that low, and we are back down below support. We are positioned in the gold miners, and we do not speak our book here. We don't talk our book. I would not be a buyer of gold or the miners at current if you're already long. If you're not in a position, I'd be looking at the weekly charts for a bullish key reversal bar like you had here, and then start building your position. We need a good day tomorrow. We really do. Because this is not a good chart. We may be putting in higher lows on the Stokes, but it doesn't matter if you put in higher lows on the Stokes, which is what appears that we have right now, because we moved on to higher highs, yet price is not following along. So it kind of helps when you have price following the stochastics momentum to the upside. But that's not happening just yet, so I would say no to adding more. Daily chart. Now, here's the disturbing part, is that yesterday we actually broke out on a daily time frame. Today, hammered on volume, no less. So we had the dollar down, yet gold was down as well. What gives? The reason why gold is not catching a bid right now, you hear a lot of people saying that it's manipulated in the paper market on the COMEX. Okay. People have been convicted of manipulating the silver markets. I don't know about the gold markets, but probably the gold markets as well. Where there's paper, there's manipulation. They'll do it with Bitcoin at some point in time. So when you have yields that are rising, the reason why they're rising is that the Federal Reserve is going to duke it out with inflation. They're on the side of the little guy. I can't believe how naive traders are. It's shocking. It's shocking. But we've been here before where yields have gone up higher circa 1971, 2, soon thereafter where Nixon took us off the gold standard. And let's see if I can bring it up here. I don't know how far back the TNX goes. It may not go back to the 70s. Wrong section there, Bubbo. We'll make it gray. All right, so this is the 10-year yield. It does go back that far. Wow, impressive. Very, very impressive. Now let's play around a little bit. Ooh. And we'll also make that gray. So you may be asking, you're talking about yields moving up higher and you're bullish on gold. What's wrong with you? It's a good question. There are rarely times absent excuse me, you know what? Forget that. Not even geopolitical. Yields generally go down during geopolitical risk because money flows into the bond market. There are rarely times where the dollar and gold trade in tandem. That's during geopolitical risk. When yields and gold trade in tandem, which is rare, it's usually because of stagflation. What kind of an environment do we find ourselves in right here, right now? Stagflation. It's here. Inflation, little growth. Stagflation. Classic. So let's revisit a point in time in history where we had stagflation. Let's take a trip down memory lane. Folks, I'll take you back to 1971. And in 1971, Richard Milhouse Nixon decided he was going to take us off the gold standard temporarily. It's a fact. And you can see here, this is the price of gold, obviously. And in gray, you have the 10-year yield. What did they do from the first year that they had the gold price chart was 1970 because you were allowed to own gold then. So that makes sense. Because it was illegal to own gold up until this point. So that was because of FDR during the Great Depression. So in 1971, gold rallies, 10-year yield rallies. Again, deflation. This went on. Even when yields pulled back, gold pulled back. This went on until 1980. And then it all came unglued. You could argue it went on and into 1985 because they traded down together through 1985. Actually, it went on till, think about this, 1988 through the early 90s. You had a lot of correlation between the 10-year yield and gold. But as you could see, it all diverged, right? Beginning in, let's say right here, we have a doji formation, January 1999. Gold began to rip up higher when yields began to collapse. Why? We began the Federal Reserve running the government, literally running the government. Silver and gold will be in an accumulation phase till next year. Yeah, and I kind of hope that's the case. We're doing great with selling covered calls. Outstanding with selling covered calls. So that's fine with me. We're just generating cash flow. We don't care. Cash flow every week. And the longer the consolidation, the greater the validation of any breakout. So that's fine. Now, there's going to be a lot of harsh backing and filling, as we're seeing right now. So for those that come out to you and say, you know what, gold is dead because yields are rising, now you know. Historically, that hasn't always been the case. Rick Roofing, what's up, brother? Here are the Stokes on gold in a yearly time frame. We're still in a bull market. This is a bull market. Bam. What's the correlation? There's not enough data for correlation. Okay. Silver. Up week. Can't believe silver's up. Up, but off the highs of the week. Failed breakout. This is a stock we just bought. I think it was Franklin that brought this to our attention. Thank you, Franklin. Nice chart. Pretty breakout. And these are our two energy plays. OPTT. That's up 0.75%, a little more this week. Good. All right, let's take some chart requests. What time is it? I probably went long. Whoa! It's 7:23. All right, I'll go over members requests, and I got to sign off. I've never gone this long before. All right, Franklin, Annalie. Folks are going to be using TrendSpider. You like automated technical analysis? Strongly encourage it. Link below, 35% off. Use the link below. All right. Annalie, N-O-Y. Blue Star Doji on a 45-minute chart. That really doesn't help your case that much, but this doji, this is a raindrop. It's implying that we're going to get a trend reversal. You're probably going to get a pop-up high tomorrow morning. Let's switch to normal candlesticks. Let's go to a monthly chart. Okay, so we have resistance here, but I'm not going to set an alert on the monthly chart. I'm going to do it on the weekly chart. So it's a good looking chart. We bottomed out back in April of 2020, rallied, multi-month consolidation, weekly chart. Now what I'm going to do here is I'm going to go back to that monthly chart vis-a-vis overlaying monthly resistance on top of the weekly chart. I want to know when Annalie breaks out above monthly resistance. This yields a very, very nice premium dividend daily chart. Yeah, you got to avoid this right now. You may get a pop apart tomorrow morning, but we're not day traders here. So Annalie on a daily time frame hit resistance. This is the value of the automated trend lines. Hit resistance, take them off, put them back on, and they got rejected. So you may pull back further here. You do have support down at 878. We'll create an alert there. Touch, bounce. Little bit of sensitivity. God damn it. If it's going to happen, it's going to happen within the next 5 days. But we'll keep it on for 10 if triggered. There we go. I would wait on Annalie. I would wait for the pullback to support or a breakout. But it looks like it's probably going to pull back. You may get a pop tomorrow morning. I would not chase that pop because the 45-minute chart flash that blue doji, and we're bouncing off of some moving averages. They may rally tomorrow morning. It's probably going to fade, so be careful. What's the other one? DSX. Dana Shipping. So far in the month, we have a monthly breakout. And we've cleared. These heat maps show where there's a bunch of resistance, a lot of history on buying and selling, and we're through it. Very good. Weekly chart. All right, so breakout point failure. We broke out last week, pulled back this week. We may flop around here for the next couple of weeks. Daily chart. Yeah, I'm not feeling the love here. I think you're in a consolidation range. If you're looking for an entry point, look down at 490 per share, give or take a penny. And well, thanks for your dedication, brother, to an awesome channel. Thank you very much. Appreciate that. Just getting off work, checking your channel, and you're still live. Yeah, long night. I was pretty hot early on. So, folks, thanks for joining in. Please smash the like button, subscribe to the channel. Thanks for being here. I really appreciate the time you spend, and have an awesome weekend and a great trading day tomorrow. Be well.